Is UiPath a buy after minus 40% loss? Please like the video and subscribe. UiPath Business. UiPath competes in a rapidly increasing robotic process automation business and has a competitive advantage. The company significantly improves the operating efficiency of its customers. TAM is estimated to be in excess of $60 billion by management. Our valuation algorithms show that the stock is undervalued and has a lot of room for development. The current working process involves numerous repetitive and time-consuming duties, which significantly reduce employee productivity and result in significant profit losses for businesses. Automation methods are meant to address the problem, as AI technology learns task execution strategies and dramatically speeds up the working process. Employees can use UiPath technology to automate tasks such as extracting data from documents, updating databases, filling out forms, and logging into applications. The services help organizations to decrease employee hours spent on mechanical, repetitive operations and deploy their staff for creative jobs with heightened efficiency. UiPath is the industry leader in robotic process automation, which is expected to reach $1.57 billion in 2020. According to Grand View Research, the market will develop at a strong double-digit rate until 2028, with a revenue CAGR of 32.8%. Businesses must increase their expenditure on RPA solutions because it helps them to reduce overhead labor costs and boost productivity. According to Gartner, UiPath is the industry leader in RPA. UiPath received the top rating for ability to execute and the third highest rating for completeness of vision from Gartner. UiPath was also named the leader in the RPA industry by Forrester Wave. According to the study, the company has the best strategy, the best current offerings, and a wider market presence than its competitors. Meanwhile, according to IDC Research, the intelligence process automation market is worth $17 billion and is predicted to expand at a 16% CAGR through 2024, when it will reach $30 billion. The overall addressable market, according to UiPath management, is substantially larger, with a $60 billion opportunity. The usage of UiPath services encourages businesses to raise their spending on the platform, since case studies show that firms start with small budgets and gradually expand their spending over time. In Q1 2020, a multinational pharmaceutical business paid $100,000, but by Q4 2021, the amount had climbed 32 times. In FY 2020, a Canadian government agency spent $30,000, but in Q4 2021, its spending grew by 69x. One of UiPath's customers is Nielsen, Nielsen. In more than 100 countries, the organization delivers information, data, and market measurement services. To be competitive in its industry, the organization must collect and evaluate a large amount of data in a short amount of time. During the previous 18 months, the company has installed UiPath RPA systems in over 40 countries, saving about 350,000 working hours. Nielsen plans to save over 500,000 hours per year by utilizing UiPath's services. Oleg Royce, VP of Global Automation and Head of the Center of Excellence, shared his thoughts on UiPath RPA technologies. PwC, a global audit business, also employs the UiPath technology, which has helped them automate over 200 activities. The company has already deployed over 40,000 robots, saving over 5 million hours of labor. PwC US partner, intelligent automation and digital upskilling leader Kevin Krohn expressed his thoughts on the firm's offerings. As a result, the company's ARR CAGR increased by 62% in the last 2 years, while revenue increased by 65%. Profitability. The company has a very high gross profit margin, which has topped 80% in the last 5 quarters. Although the EBITDA margin is better than in 2019, it is still in negative territory, with a result of -52.2%. Meanwhile, management has been able to increase the operating cash flow, which is now around 0%. The negative EBITDA margin might be due to high selling and marketing costs. In 2019, management spent more than 140% of revenues on S&M, but by Q3 2021, that figure had dropped to 76.8%. Because the UiPath business model does not necessitate a large marketing budget over the long run, we believe the margin will improve significantly in the future years. Simultaneously, management invests 30% of revenues on R&D efforts in order to provide advanced solutions to customers. Valuation. When we look at the stock's historical value since its IPO, we can observe that the multiples are constantly dropping. The current PSTTM multiple is 28.8, while the average since the IPO is 42.2. The price to gross profit ratio is 35.2, whereas the industry average is 50.8. We created a regression model using data from the top 100 tech stocks to calculate the stock's relative value. PSFWD multiples were regressed against expected 3-year sales CAGRs and TTM gross margins. As a result, we have a model with a R-square of 69.3% and a F-stat of 108.5%. The software's outputs produce an implied PSFWD ratio of 32.1, implying a stock value of $54. As a result, the rate of growth and TTM profitability point to undervaluation. As a result, our model calculates a $62.30 intrinsic value, which is 40% greater than the current stock price. Conclusion. UiPath's business has a lot of room for expansion. Using our services, customers can significantly improve the efficiency of their work processes. Given its competitive advantages, the company has a sizable total addressable market in which it can grab significant market share. According to studies, UiPath is the market leader in its field. Customers are really pleased with the company's services. Our valuation models show that the business's growth potential is not reflected in the stock price, and investors should expect substantial double-digit returns over the next decade. As a result, we rate the stock as a strong buy. Thanks for watching. Please like the video and subscribe.